Well, a pretty boring day today, to say the least. My name is Hamilton. I'm here with the Trading Initiative. Let's talk about the session wrapping up May 8th, 2024. First things first, all three major indexes, the S&P 500, the NASDAQ, and the Russell 2000, opened up down on the day. And they opened up down kind of a lot, down 0.5%. Small caps were down even more. But the information that we can take away, I think that's important today, is the fact that we filled the gaps in two of the three indexes. SPY closed minor up at 0.01%. The Qs closed down 0.06, but we did fill the gap. Now, the Russell 2K did not fill the entire gap, but that is a very strong candle on the daily. And the reason why we think that this is important information is when you have a trend in place and price gaps against that trend. Generally, there's this underlying assumption that the strength of the trend is really shines through price action on how quickly that gap can fill. And in the the S&P 500 and the Qs, the gap was filled the same day, right? So we were at market open asking ourselves, how quickly is this gap going to get filled? Even if it is going to get filled, is it going to get filled today? Is it not? If it's not, maybe back to the drawing board for a little bit, waiting to buy more things. If it does fill the gap, are we going to continue to press the gas pedal down? And we did. We filled the gap. I will say, though, that most things didn't really do a whole lot. There was a lot of strength in utilities, which, by the way, I think a lot of people are looking at this as a defensive play. And that's kind of the traditional way of thinking of utilities. But I want to point something out. I don't want to get into it in this video because there's just not enough time. But this idea of an AI bubble with semiconductors leading, I totally get it. I understand. But a lot of these semiconductor plays are very frothy. We're seeing a lot of them come off through earnings and then get bought back up through time, but they have had incredible runs. There are other areas of the AI bubble than just semiconductors. And I want to point something out. Ticker CEG is a stock that we have a position in. We've traded this stock multiple times. We have a position in it right now. Hit a 52-week high today again. Guys, this is a nuclear utility-based company, and I just want to point out that there are a lot of nuclear-based companies that are within the utilities-based sector. They are not considered energy companies, at least in terms of ETF weightings. They are considered utilities. So all I'm going to say is most people probably look at utilities going crazy right now as a big risk-off indicator, but what happens if the fact that the nuclear names are going nuclear, they're going parabolic right now off of the AI bubble, and we're seeing that through the XLU ETF going bananas because that's where they're concentrated in. Think about that. What happens if this is actually risk on? I don't know. I'm just kind of throwing that out there. But I do know names like CEG, 52-week highs, VST, 52-week highs. Don't let me fool you. We missed this, but we did plan on buying it way back in 2023. We did miss it, though. This is another utilities-based name. So once again, XLU looks really good, and most people will look at that and go risk off. But think about it. Nuclear-related stocks, which are supposedly powering or going to power this AI bubble, this AI boom, they are within the utilities ETF. So just something out there. Just think about that. Maybe it'll change the way you view this stuff. But financials had a very, very, very strong day today. We're back up and over those all-time highs, that 41 area pivot. We're still long. I really, really like the action in JP Morgan today. I still have a position. We filled the entire gap from the earnings report back in the beginning of April there. I think it's the financial space is going to continue to do really well. Wells Fargo placing near a 52-week high today and almost an all-time high in Wells Fargo if we go back to 2018. I really, really, really like the financial sector, and I still think that this is precluding to a all-time high breakout relatively soon. But all things considered, not a whole lot happened today. The dollar kind of meandered around, right? Caught a little bit of a bid, but we're pressing up in towards a potential support, now turned resistance. I really want to see what happens here at the 105.75 area. Do we get back within the range? If we do, I think there's still going to be some short-term weakness in the indexes. If we break back down towards the 200-day moving average, I think that's what's going to give us the juice for those all-time high push. And then obviously we want to see bonds not get sold off. Bonds did get sold off today. There was some weakness in the equity market at the open. It followed through with bonds. It's a positive correlation. Was that it? Was that the end of bonds? I don't think so, but it could be. Who knows? We don't have a trade in bonds right now. We're just using this as an analytical piece, but we do want to see bonds not go down. That's pretty important for a bullish stock market, right? But what I want to do here for the next 2 or 3 minutes is kind of focus on, earnings. So earnings have been a hit or miss across the board. This has been a rather challenging environment for earnings. It's really been a stock picker's market. There's really no rhyme or reason for a lot of these sell-offs and stuff like that, but it's not up for us to decide why. It's up for us to react, right? We don't necessarily care inside of TTI about the earnings themselves. We care about the reaction to the earnings. So things like Meta, which gapped down nearly 20%. This was the single largest loss of cash ever. Just want to point that out. Is now working on filling the gap, right? So, Meta's trying to fill the gap here, but it did gap down. Netflix, big gap down, and then has filled the gap. And then you have names like Google that we're currently in right now that gapped up huge. And we have names like Microsoft that gapped up and then is kind of meandering around. And it's all over the place here with NVIDIA's earnings coming up in 2 weeks to this day. I think it's May 22nd. All eyes now shift to NVIDIA. I think it's the last of the Mag 7 stocks to report. This is kind of the leading stock in the entire market, this AI bubble idea, everything. You just had the news come out with Stanley Druckenmiller that he reduced his position. Didn't sell it all by any means, but he said he did reduce his position through March. This is where most of the focus is going to be. Having said that, it has definitely been a stock picker's market, and we are long a couple of stocks, even if they're small positions or leftover positions from opening them up in Q1 of 2024 or Q4 of 2023 even. Some of them absolutely ran up huge, and some of them got bopped, and I'm going to talk through a couple of them. I think ARM getting hit here after hours back. We're back to where we were like 4 or 5 sessions ago. So this was a trade that we originally opened up off the 56.5 pivot. It was a 2,000% win when we were trimming on the way up. We still have a very small core position, but it's a free trade. This is like the last 1 or 2 contracts we have on this, and we did get hit. We're holding through ER with those last 1 to 2 contracts. I think they're up like 500%, but at open, they're obviously probably going to be up only about 250% or something like that. So we'll see what happens if we want to close those. We still have 2 months worth of expiration on that. But this is the last real semiconductor name to report before NVIDIA. Thought process here is we have yet to start building a new position in semiconductors. And we kind of wanted to wait until a majority of the semiconductors have already reported because it's kind of been a shit show. TSM gapped down and then is all of a sudden pushing back up and towards potential 52-week highs. MU gapped up on earnings and then is now pushing back up towards potential 52-week highs. AMD got hit and is now trying to push back up and over into the risk on level above 160, 161-ish area. Now we have ARM that reported and it's down. So most of the major semiconductors, at least that we've traded, are on the right side of the earnings. They're already through earnings. Most of them are reported pretty good earnings. Now, I think what we're going to do is we're going to start dipping our toes in on semiconductor plays prior to NVIDIA, but we're not going to own NVIDIA. I'm just telling you that right now. I don't want to get into what we're looking at specifically. If you want to get in on that, check out the market research stuff that we provide. But we are going to start dabbling in semiconductors again. It's going to be the first real community-based trades that we're taking in semis since the beginning of Q1 of 2024. We have not added into this dip whatsoever, and now that we're on the right side of this ARM ER, we think that there's an opportunity here because if NVIDIA does blow everything out of the water, earnings go nuts, whatever, we're going to have such a big head start on these semiconductor names that these are going to end up being huge trades. And the sweet spot is if NVIDIA doesn't and it shits the bed and the market hates the earnings, our goal here is over the next 2 weeks to turn some of these semiconductor entries that we're going to be opening within, like starting tomorrow, potentially, we're going to be talking about it inside of TTI in the Discord at least. We want to try to flip these for free. So 100% on the contracts, get out half of the position, turn them free. That way we have a free play in a semiconductor name or a couple heading into NVIDIA's earnings. If NVIDIA shits the bed, it's a free lottery ticket. We lose no money. If NVIDIA goes nuts, obviously those big trades turn into potential grand slams. So that's the idea. Now, whether or not that works perfectly, I have no idea. We haven't actually put any capital to this, but that's kind of the idea going into tomorrow's session. App is a name that we've had on our books all the way back since 45, big gap up. This is going to be probably a 1,500% winner for us. We still have contracts, $65 calls for July. They're already up 1,000%. This is into 52-week highs. We're probably going to have a 1,500% winner on app, which is awesome to see. We were looking at potentially adding in a new bank today because it's floating up and over 1150. We're already in one of these contracts here. It's coming up on earnings as well. But one play that we were looking at taking earlier today, and we took, some of us, not everybody, but some of us took shares in this. So first things first, this was not a great options play. Options chain super illiquid, super expensive, just didn't really like it. So we decided to go with shares on this with a break above the 24550 area and a stop below 228. Well, here comes earnings and we're down on the play now off of the risk on level about 10 to 11%, which is a 2x ADR, a little bit more than 2x ADR move. We're going to be stopped out of this Duolingo play about the second or third day after we open it. Unfortunately, stuff like that happens, but it's nice to know that we took shares on this. It's a relatively small position, all things considered, when we were talking through the actual trade idea. We were talking about keeping positioning a little bit lower into the ER event and then adding into it if it's a winner. So hopefully you guys kind of take something away from that. Adding into strength, I would way rather add into strength than ever buy the dip, because we don't know if the dip's going to ever stop. Probably will, but we don't want to try to time that. So this is one of the losers that we have. ARM, once again, we have contracts on this. Although it is still going to be a winning trade, we are going to probably lose 50% of the last of the unrealized profitability. App is going to be up huge, and also we have some contracts still left over in Hood. This is a big trade for us as well. We originally opened it up off of the 13.5 pivot, and we have Augusts on these. So I want to point something out. When you're watching my content, we're not taking day trades, and we're not taking trades that are like 10 days out. We're taking trades upwards of 6 to 8 months out. So a lot of these trades that you see me talk through are generally going to be up very big. They're already free, and these are like the last remnants of the contracts if we haven't added in yet. But this is kind of the way that we like to trade. We don't necessarily care about earnings reports too much. We care about the reaction to it, and we obviously want to manage risk into those ERs. So hopefully you guys are learning something from this. If you're not already a part of the newsletter, I want to show you something. I sent out a newsletter earlier today, which I thought was pretty cool. It's showed the growth leaders report. This is a scan that I put together. This is a play off of William O'Neill's Can Slim idea. So a lot of this stuff, if you don't know anything about him, he's legendary. He's created IBD. If you don't know what that is either, you need to start Googling, boys and girls. But this is his framework with our technicals thrown on top of it, and it's filtered through by percentage to 52-week highs. So you can see where the real strength is with all the fundamentals that back behind it. And you can see we were going to take 4 trades off of this, and we're already in a couple of these already. So this particular scan, if you're not a part of the newsletter, link is in the description below. It's free. I send this out every single morning. We send out a different scan every morning. It gives you an idea of what we're looking at, and it gives a description of the scan so you know exactly whether or not it's even worth your time taking any of the trades and looking through this stuff. But there's a lot of really good setups on this specific scan. So if you have time, pause the video, take a screenshot, go through TradingView or whatever charting software you have, and look at some of these names. You're going to like a bunch of them. Guys, my name is Hamilton. That is the report wrapping up May 8th, 2024. If you like this type of content, please like and subscribe. Leave a comment below, and I'll catch you in tomorrow's video.